You bought Amazon, you bought Alphabet, and you bought Microsoft.
Yes. And going and look, I kind of anticipated, and I'm not surprised by the actions that the rules have taken here, that it would go back into those three names. We now own 6 of the 7 mega caps, and I identified the momentum as being as strongest as it has been in the Mag 7 since the fourth quarter of 23. If you study 1 month, 6 month, and 12-month timeframes as it relates to momentum, Apple is the one name that we do not own. And the reason that we do not own it, it is the one name out of the 7 that has negative performance in each one of those 3
Well, you sold
timeframes.
that one.
So we are.
So let's be clear. It's not you did own it. You no longer own it.
No longer own Apple. Don't own it personally. Don't own it in the ETF. Part of me wants to own it personally just because it's Apple. But when I looked at the pure statistics and I looked at those 3 time frame measurements and I observed the fact you can't ignore that Apple 1, 6, and a 12-month time period has negative return. You can't say that about any of the other 6. You actually have 3 of the companies, Microsoft, Meta, and NVIDIA, that have positive performance in each one of those 3 time frames.
Let's put it this way.
Yeah.
If you would have kept Apple in here, you might as well take the metrics that you use to spit out your score and throw them out the window in the garbage. Because the stock has not had any momentum behind it for any great period of time in what feels like 3 months.
A year. Yeah, and that's the difference.
Well, remember, from last year's WWDC, the ramp up, which the chart would show, big ramp up, and then you all of a sudden, then you get downgrades, and you have the tariffs and all these other issues that have negatively impacted shares of Apple. That chart there shows it well. And
that's the difference between facts and feelings. And look, some people that watch the show, they have fundamental strategies, and that's that orientation. I'm obviously using rules. I'm observing price, most importantly, and momentum, and factoring quality as well. And you're correct. If you're studying what Apple has done on these different time frames over the last year, you can't find really anything positive to get excited about. The other thing on these earnings, by the way, I just want to talk about this for 1 second. What about the reaction to earnings? Because if I were going to score it, I'd say we've got 2 wins, Microsoft and Meta. We have 3 losses, and then we have a tie. Alphabet's basically a tie if you look at price reports.
You're only talking about price action post-earnings, not the quality of the results themselves.
And it goes back to good news, bad price action, which we've been talking a lot about on the show. So 6 have reported. You really only have 2 that you've seen really good price action after the earnings.
Well, let's not forget, to your exhaustion point of last week, these stocks ran fast and far heading into their numbers from the April low. NVIDIA was up 80%. Now, it doesn't report for a few weeks, so we're not going to get the information that we want out of that one. But Microsoft's up 48% now. Meta's up 47% since the April low. So the stocks, Jimmy, had come a long way.
They have, and I'm really thinking about what Joe's saying here about the price action post-earnings versus the actual results. Obviously, Amazon was really a disappointment. Here's where I'm going with this, Joe, is I think these, much like Alphabet, I think it's fundamental responses. You know, with Alphabet, I think the muted response was we still have this overhang from the DOJ trial. With Amazon, you know, Amazon Web Services, that's the one area you couldn't see it underperform, and the guidance there, the margins was a little bit disappointing. So, I want to believe you that this is saying something about the market, Joe. I still think it's saying something about these stocks individually. All that said, I still am with you about exhaustion. I still think a 5 to 7% correction, consolidation, whatever you want to say it, but I think it's more the macro picture as opposed to what these individual stocks are saying. And to summarize this, look, these stocks, Amazon, Alphabet, Microsoft, these are great companies that if you can just get through this late summer volatility, they're probably going to set new highs before the year end.
By the way, calls today, NVIDIA buy at Citi and B of A. That's reiterated at both places. Apple gets reiterated buy at B of A. And Amazon reiterated outperform at Evercore. It goes to the overall point that Bryn started by suggesting that, well, when in doubt, go where the money's going and continue to put it here, because everything else is too difficult in that kind of environment.
We've been looking for this CapEx inflection, and it's right in front of us, but it's being led by innovation and AI. That's where not only are the companies that are benefiting from that spending are doing well, but the companies that are making those investments from a CapEx perspective are also, currying some favor, if you will, with investors. If you're looking at where can I commit capital to in this environment and where can I potentially see an opportunity, it has to be AI or innovation adjacent, Scott, because the other thing that people are really worrying about is productivity enhancement and margins. So I think at the end of the day, this is why you're getting the enthusiasm, but not only within the AI sector, but I also think for stocks that are, for companies that are investing in those areas.
Elsewhere in the rebalance, most semis have not traded all that well lately. Today doesn't really count because many are higher going into AMD, but if I gave you the list performance of several stocks within the space, you'd say, oh, that's pretty ugly. You added KLA and Lam.
Yes.
So semi-equipment names you've added into the ETF in the rebalance. Why?
So semi-equipment has had a very positive reaction, I believe, to the news the weekend of May 9th to May 12th in Geneva between the Chinese and the U.S. And really, I think the semi industry in its totality was most punished as we learned about the extreme nature of what tariffs are ultimately going to be. Semi-equipment names, there's three names you focus on: KLA Corp, Lam Research, and Applied Material. The obvious question when I was observing what the results were was, why didn't we go into Applied Material? And again, studying momentum, in the near term, KLA Corp and Lam Research have their 52-week high resting in July. Applied Material 52-week high is all the way back in October. Now, you could look at that either way: buy high, sell higher. That's the way I look at things. So I want to own the names that are making highs most recently, not the names that have made highs 9 months ago. But there are others that could look at that and say, from a valuation basis, okay, Applied Materials is in a great position. I think overall, the overriding thesis, at least for me, was that I'm seeing a return to the semiconductor industry once again. And if this momentum-oriented ETF is doing it, I think other momentum ETFs are going to follow.
I want to hit a couple of things. Palantir reports earnings after the bell. Bryn, I'm going to you on that. It's up 110% year to date. It's up 18% in a month. We've been really studying the impact of the high beta trade, which did break its 6-week win streak last week and had its worst week in a while. This stock always seems to be in that conversation about what its PE is, what its growth prospects are. It seems like everybody loves it. Not everybody wants to own it at these levels, but you do, and you have. And what's your outlook here?
Well, I have a small position left, right? I've been, selling. I bought it originally at 27 last year. So it's had just like a monster move. This is one of the few companies from a year ago that was like all in on AI. They already had a proven track record with what they're doing with the government, and they just changed their whole business model. And so I think you have people love Alex Karp, like Elon. You're still going to get 38, I think 53% revenue and earnings growth this quarter. So I think the chart tells you, even though it looks very exponential from a chart perspective, I think it marches higher tomorrow because people love this stock, they love Alex Karp, and there's still so few companies that are just squarely focused on implementing AI. It's NVIDIA, Palantir, Cloudflare, and probably just a few other companies that are pure plays. And so until you get more pure plays in the public market, Palantir, I think, is going to continue to attract an outsized share of capital, regardless of its price to sales or PE or et cetera, et cetera.
Outsize is a good word you use because as we showed on that chart and the return over 1 year, it's 545%. It stayed in the JOET.
It has, and the rules have kept it there since January of 2024, and there's no way that I would have had the ability to do that. But this is a company that also has very strong margins as it relates to free cash flow, 42%. The revenue growth for a software company, the organic revenue growth at 35% for 2025, it's very difficult to find another software company that is able to do that. So I understand the valuation is rich at 229 times. I understand the skepticism. If you look at the analyst community, there's 31 analysts that cover the stock. The 12-month price target is $116. There are 51% holds, and there are 16% sells, only 33% buys. So I think a lot of people are skeptical about this. And this is a classic example of a momentum name that continues to run higher. Could it pull back? It absolutely could. That's the nature of the volatility that these names capture. And you have to understand that if you're going to own it.